As global central banks turn hawkish, penciling in a series of rate hikes throughout this year, will Indian markets succumb or tide through the incoming wave of rate hikes? Most analysts expect the global markets to remain choppy over the next few months as they react to the fallout of the ongoing geopolitical crisis. Indian markets too will be no different. Let's listen in to Deepak Jasani, Head of Retail Research at HDFC Securities, on whether a bull run will sustain in the long haul.
This was basically sell on expectation and buy on news. So once the trigger is out of the way, people who were not buying so far have come to buy. But whether this will sustain for more than a week or 10 days, I'm not so sure, because there are a lot of headwinds in the market, globally, locally, macro-wise, micro-wise, there are a lot of headwinds. So we may rise a little more, but how much more and for how long, it is difficult to say, and it is unlikely to rise beyond a few days from now. The markets are already discounting the possibility of this war coming to an end, or maybe not escalating from now. So in that sense, whatever good news comes in that direction, market will get a little excited, not very excited, because it is largely factored in.
That said, a series of global events are lined up this week that the markets will keep a tab on for a short-term trajectory. UK will release their Consumer Price Index and Producer Price Index numbers for February on March 23 after inflation stoked to a 30-year high. That apart, Eurozone will roll out the consumer confidence data for February on March 23. Later in the week, US President is slated to meet European leaders at an extraordinary NATO summit in Brussels on March 24. Biden will also join the European Council summit, where efforts to impose economic sanctions on Russia are underway. The US as well as Eurozone is expected to release services PMI and manufacturing PMI data on March 24. The economic data will be a key variable for investors to track any sublime in inflationary pressures. By end of the week, UK will roll out retail sales numbers for February on March 25. So, what should investors expect back home? Will markets continue to see a smart rally, or is a pullback likely? Here is Business Standard's Abdul Bakar on what the tech charts indicate for this week.
Both the benchmark indices, BSE Sensex and Nifty 50, reclaimed 200-day moving average on Thursday, while considering global clues as well as the interest rate hike done by Federal Reserve, which also gave a positive close to US market. During the day, Sensex and Nifty was seen hovering around 50 days moving average on Thursday. Now, the hurdles for the Sensex comes at 58,300 and for Nifty, it is at 17,380 levels. These are its 100 DMA. The current trend is very optimistic, and if both the indices take out 100 DMA resistance, Sensex could be seen heading towards 59,800 and Nifty towards 17,800 levels. As far as Nifty Bank is concerned, it is yet to take out the resistance of 200 DMA placed at 36,700. Here also, the trend looks very optimistic with the support of 33,500 levels.
Let's listen to Gaurav Dua of Sharekhan as he spells out trading strategies to adopt this week.
Cycle. We believe India is on a cusp of a multi-year upcycle, and play that upcycle. You could have some exposure to real estate and real estate linked stocks, which are basically it's building material stocks. You can also look at some corporate sector focused private banks and State Bank of India among the public sector banks. We are also positive on consumer discretionary stocks, because as the economy opens up and there is a growth in the economy, there will be a higher spending on the discretionary items. And we are also positive on certain select select this thing industrial and and this engineering companies. We believe that the world is in a stage where India has a potential to increase its share of exports. We see exports as one space which will give a lot of interesting investment opportunities.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.